Have you noticed the current state of the stock market and wondered what's causing these fluctuations? The financial world is abuzz with the latest movements in the stock market, particularly in regards to the Sensex and Nifty. The year 2023 has seen these indices surge to new heights, a development that has caught the attention of investors and analysts alike. Sensex, the benchmark index of the Bombay Stock Exchange, has been on a roll, gaining significant points and crossing the monumental 20,000 mark. A similar trend has been observed in Nifty, the National Stock Exchange's flagship index, which has also hit new highs. These indices serve as barometers of the Indian stock market, reflecting the overall market sentiment. Their climb to new peaks indicates a bullish trend, with investors showing confidence in the market's growth potential. However, while these large-cap indices are soaring, mid- and small-cap stocks have taken a tumble. These stocks, which represent smaller companies, have witnessed a drop, causing a stir in the market. This contrasting trend has left many scratching their heads, wondering what's causing the divide between the performance of large-cap indices and their smaller counterparts. The stock market is a complex entity, influenced by a myriad of factors ranging from economic indicators to geopolitical events. It's a dynamic landscape where the winds of change can shift direction rapidly. This year, we've seen a robust industrial growth in India, reaching a 5-month high in July, and consumer inflation in August falling below 7%. These factors could have played a role in the surge of Sensex and Nifty. But what about the tumble in mid- and small-cap stocks? Could it be a result of investors shifting their focus towards large-cap stocks? Or are there other factors at play here? It's a question that warrants further exploration. As we journey through this financial landscape, it's important to remember that the stock market is not a one-size-fits-all scenario. Different stocks and indices can perform differently based on various factors. It's all about understanding these dynamics and making informed investment decisions. Let's delve deeper into what has led to these dramatic shifts. Several factors have contributed to the surge in Sensex and Nifty. Let's dive into some of these key influences to gain a clearer understanding of the forces shaping India's financial landscape. One of the primary contributors to this surge has been the industrial growth in India, which reached a 5-month high in July. The growth of an industry is a clear demonstration of economic health, and this 5-month high signifies a robust and thriving economy. This, in turn, has a positive impact on the stock market, boosting investor confidence and leading to a rise in indexes such as the Sensex and Nifty. Hand in hand with industrial growth, we've also seen a decline in consumer inflation. In August, consumer inflation fell below 7%, a significant drop that has favorable implications for the economy. When inflation is low, the purchasing power of consumers increases. This leads to increased spending, which can boost corporate profits and subsequently drive up stock prices. A critical factor in maintaining this positive economic trajectory has been the Reserve Bank of India's ability to maintain monetary policy stability. The central bank has managed to keep a handle on interest rates, ensuring they don't negatively impact growth. The stability of the monetary policy provides a conducive environment for businesses to grow and prosper, which reflects positively on the stock market indices. On the global stage, India has shown remarkable leadership and consensus building at the G20 summit, as noted by Commerce and Industry Minister Piyush Goyal. This international recognition not only enhances India's reputation but also increases investor confidence in the Indian economy, contributing to the bullish trend in the stock market. Lastly, let's touch upon the aviation industry. Indigo, India's largest airline, has been proactive in addressing safety concerns with its Airbus A320 NEOs. The company is looking to lease 22 aircraft from the secondary market, a move that indicates their commitment to safety and customer satisfaction. Such strategic decisions by major companies can increase investor confidence, leading to a positive impact on the stock market. These are some of the key factors that have led to the surge in Sensex and Nifty. From industrial growth to inflation control, from monetary policy stability to international recognition, and from safety measures in aviation to strategic business decisions, these elements have collectively played a significant role in driving the surge in India's stock market indices. While Sensex and Nifty have been soaring, mid and small cap stocks have taken a tumble. Now, this is a phenomenon that has caught the attention of many. Let's dive into why this has been happening. The stock market, at its core, is driven by sentiment. And when we talk about mid and small cap stocks, they are particularly sensitive to shifts in this sentiment. The recent surge in Sensex and Nifty has been largely driven by a handful of heavyweight stocks. This rally in the major indices might give the impression of a booming market, but the reality is a bit more nuanced. The broader market, particularly the mid and small cap segments, hasn't been partaking in this feast. They've been facing their own set of challenges. One major factor is market volatility. The stock market has been on a roller coaster ride. While the large cap stocks have managed to weather the storm thanks to their robust fundamentals, the mid and small cap stocks haven't been as fortunate. They are often seen as riskier bets, and in times of uncertainty, investors tend to flock towards safer options. This risk aversion has led to a sell-off in these segments, causing their prices to tumble. Another factor is the shift in investor sentiment. With the global economy still grappling with the aftermath of the pandemic, investors are increasingly leaning towards defensive stocks, the ones that are less likely to be affected by economic downturns. This has left the mid and small cap stocks, which are often growth-oriented and more vulnerable to economic shocks, in the lurch. However, it's crucial to remember that the stock market is not a zero-sum game. The rise of one sector doesn't necessarily mean the downfall of another. It's a complex ecosystem where different sectors interact and influence each other in myriad ways. The market dynamics are always shifting, and what we're witnessing now is just a part of that continual process. The market is a complex ecosystem where the rise of one sector can impact others in unexpected ways. So, what have we learned from this analysis? We've seen the current state of the stock market, with the Sensex and Nifty reaching new heights, hitting the 20,000 mark and beyond. This surge has been driven by a combination of factors, including an industrial growth in India that reached a 5-month high in July, and a drop in consumer inflation in August to below 7%. The Reserve Bank of India, maintaining a stable monetary policy, has been instrumental in this growth, not needing to worry about high interest rates impacting the growth. Moreover, India's diplomatic efforts at the G20 summit, as noted by Commerce and Industry Minister Piyush Goyal, have showcased India's leadership and consensus building, adding to the positive sentiment. Simultaneously, there's been a tumble in mid and small cap stocks. While the reasons can vary, it's important to understand that these fluctuations are a normal part of the market dynamics, and investors should not be unduly alarmed. Notably, the airline industry is also seeing some interesting developments. Indigo, India's largest airline, is looking to lease 22 aircraft from the secondary market due to safety concerns with its Airbus A320 Neos. This move indicates a strategic shift in the aviation sector, highlighting the importance of safety over rapid expansion. In sum, the market is a complex entity driven by diverse factors, both domestic and international. Navigating this landscape requires a keen eye for detail, a thorough understanding of market trends, and an ability to adapt to changing circumstances. Always remember, the stock market is a dynamic entity, influenced by a variety of factors. Staying informed is key to understanding these shifts and making informed investment decisions.